Hello, welcome to another Investing with Dan video. If you could do me the greatest favor and please like and subscribe, it would really help out the channel. Today we're going to be talking about PayPal. I've just bought PayPal in the last couple of weeks at around the 60 odd, 62 I think is my average. The company itself hasn't had the greatest 5 years, down 38%, peaking at around $300, which is therefore down around 78% since its peak in 2021. As we've seen this time and time again over the growth stocks that during the COVID period, which had these massive booms in their revenue and profit growth. If we just start on macro trends, we can see the PE ratio of PayPal from 2017 to currently in 2024. See, most of the time, the company has been trading at a premium to the market around 36 to highs of 74, 75, up to nearly 80 in 2020. Since 2023, when the stocks had the fall over the last couple of years, we look at the PE ratios in the 18 to 15s. And as you'll see in a second, that figure is set to fall even further. If we go onto the Barron's website, see, so the PE for 2023 is expected to be was 5. This is going to stall this year at around 5.13. But in 2025, this is expected to increase by 10%. And then 2026, a further 10%. Earnings per share of around 6 in 2026. This will mean that PayPal current share price is going to be valued at around 10 to 11 PE. And even if they get the higher rating here of around 7, then this company is 8 to 9. And if you've seen historically, this is unprecedented. Financially, PayPal is a sound company. Sales growth increasing from 2019 to 23 quite considerably. You see in the COVID periods, it was averaging 22% and the 19%, to an average of around 20% per annum during the COVID period. But this has slowed down over the last few years. In 2022, there was only a 5.85% sales growth, and then 2023, this slightly increased to 9%. Yahoo Finance has got down that there will be a 7% in growth in revenue in 2024 and a 7.8% in 2025. Net income has been a bit wobbly, 2.6 billion in 2019, but then staying at around growing to 4.2, it's then around 4.17, so very close, and then 4.25 in the latest year. Basic earnings per share has stayed stable. There's been recent share buybacks, and in February it was announced that there would be a further 5 billion stock buyback program in 2024. This would mean around 7% of the company's stock will be repurchased this year. If we just look at the balance sheet now, cash has been growing over the last 5 years, now standing at $14 billion. However, there is a bit of debt on the balance sheet. As you see, there's 1.4 billion worth of short-term debt and 10 billion of long-term debt. So the real net cash position is around $2-3 billion. Equity has also been growing, so around 17 billion in 2019, all the way up to 21 billion this year. That isn't a massive growth, but the company is purchasing back shares now, and for a tech company, they don't need a big asset base. Just back onto macro trends. We'll go onto the price to book ratio here. So the price to book ratio did increase all the way up to around 16 in 2021, now trading at more reasonable levels at 3, which is equivalent to how it was back in 2016. The company is buying back shares, which it wasn't in the levels back in 2016. So the price to book ratio will probably flatline or go up slightly, but this is nothing too much to worry about. Margins. So margins have been falling on the gross side of things, but net margins, which is probably more important, have been static at around 12 to 13, 14%. Macro Trends is a very good website. You can go back many years. I think it's sometimes up to 13 years. And you can see on the financials here, you can go all the way back to 2012. You can see the net income growth over that period of time has been very good. And we can also see the basic shares outstanding has been relatively static over the period. It's only a recent decision for the board to start purchasing back shares. As always, check out the investor relations section of any stock you're going to buy. You can always look at the past earnings and check out the investor updates. And then you'll find all sorts of information here, so total payment volume and revenue per quarter, the growth here, which sections of the business are growing, such as here we can see the PayPal branded checkout is only growing at 6%, but it represents a 30% part of the business. The PSP unbranded card processing, however, is growing at 30%, and last year at 39%. And then now this represents 35% of the business. So this is probably where some of the biggest earnings per share increases are going to come from, as well as the share buybacks. The next earnings are expected to be on May the 13th. This will give us another great opportunity to see where the company is headed, and hopefully we can get to see some earnings per share increase forecast in the future, as well as with revenue growth. Thank you for watching. As always, please let me know your thoughts in the comment section. Have a good one.